Welcome to the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. Special thanks to Tradier for putting this on their hub. They are the best. We are also 2/3 of the team at unfilteredinvestor.com. If you want to ever check us out there with our technical strategist, Mike Arnold, who is, to call him unbelievable, I think is a bit of an understatement. Bobby, ask me why I got a collared shirt on.
What do you got a collared shirt on, Jim?
Oh, well, funny you should ask. My team, after leaving the trading floor after 39 years, my team is taking me out to dinner in West Loop tonight. Man, there are some great restaurants on Randolph.
Where you guys
Street.
going?
We're going to Trino. I think it's an Italian steakhouse. That's what I think. You heard of it? I
Yeah,
think it's
I'm familiar
relatively
with it.
new because I hadn't heard of it, but the menu looks fantastic.
Yeah, no, it's really, really good.
Good. So yeah, 39 years. This is the first week that I have not been dealing in the futures markets. It's been really weird, but I like it.
Congratulations, buddy.
Doing a lot of shit, but it's just not the same stuff I used to do. Okay, so before we bring our guest on, here's my thesis over the last 2 weeks. You talked to us 2 weeks ago. The Fed was really, really worried about stagflation. They believed that the labor market was falling apart, and they believed that crude was factoring in very, very quickly into the short-term inflation picture. Those two things seem to be absolutes. Okay, so what's different now? Well, I'll tell you what's different now is we saw the BLS numbers on April 3rd, and the labor market looked somewhere between resilient and blockbuster, depending on how much credence you put into the government numbers. Is the market telling us now that it's not as worried about the stagflation ghost that we were 2 weeks ago, or is it just saying that the war is gonna finish up soon?
You know, we talked to Marta Norton in our last show, and we asked her the question about 8 months ago. She said it was a really resilient economy. We asked her if she thought it still was, and she thought it was, and she went through just a bevy of statistics as to how strong the economy actually is underlying. Now you take that and you look at the NASDAQ futures, we're 27 basis points away from the all-time high in the futures contract.
Yeah,
absolutely crazy to think that that's what's happening right here. And yet apparently it's the worst economy ever. And it's a World War III and all these bad things are happening, but the stock market doesn't believe it.
Doesn't believe it at all.
Market doesn't believe it. Yields don't believe it, but we have to talk about that with a grain of salt, right? Because like the 10-year, for example, is still higher than it was on March 19th. Mm-hmm. You look at crude oil, still higher than it was February 26th. But gold and Bitcoin are steady. So I think the entire picture is telling you that the market isn't worried about this conflict being long-term. And even when you go to the CME Fed Watch tool, there's not a rate cut going all the way out to September. That's the first cut that's being priced in, but it's still a cut being priced in, not a hike.
Not a hike. Yeah. So I think there's a lot of interesting. I think before I bring the guests on, we have to just going to say one last thing. I think a couple things have to line up: an 80 handle on crude, and then we take out the highs in S&P. I think until we can get back into the 80s, those highs will keep rejecting us in sideways. Because remember, they did in both markets, in both the S&P and the NASDAQ. Those highs have been hard to chew through, and we've come like a rocket off those lows. But anyway, I will say this again. I've said it a million times. You guys might think Bobby and I are full of crap. We sometimes think we are as well. But the one thing you cannot deny is after 25 years in the media business, we've made some really good contacts and some really high-end people agree to come on our show. And today is no exception. Let's bring in Luke Lloyd, President and CEO of Lloyd Financial. Luke, what's the best food city in the world? Just for food, what is it?
New York City. That's the easy answer. I'll say actually Cleveland, Ohio. We had some really good food up there.
Oh, come on, Robbie, kick him off.
Only because there's nothing else much to do.
Thank you guys for joining us. Thank you to Luke. We're going to do the show on our own.
So hold it, though. So if you had to go with a city that's known for a specific style of food, a la New Orleans, you know, because I mean, the cities we're talking about are just kind of amalgams of many, many different cultures. New York, Chicago. Chicago has the beef aspect of it to it. But is there another city in our country that's known for food like New Orleans is? No, right?
I don't think so. You know, I'm a foodie, but what that means usually is I've never had a calorie I've never liked. So I like everything. So there's not a specific food that I think about. Honestly, the tavern style, pub style foods is where I sit. So I like going to places like Nashville. I like to go into places like Philadelphia. Yeah, getting some unique style of food, but usually I fall back into the taverns and usually the fried food. That's why I'm trying to lose some weight here.
But Bobby, as he said something that made me think, there are some cities like Kansas City that are known for their barbecue, and Nashville probably as well, right? So there's other cities that are known for specific types of food.
I'll tell you what's underrated, if you ask me, is Cuban food in Miami and really most of South Florida. But I'm sorry, I'm a huge Italian beef sandwich fan. I'm a huge fan of an Italian hero. It's hard for me to say no to a Cuban sandwich. Those are so good.
By the way, one of the things I like about the Keys,
because everything's bigger in Texas.
Yeah, right. No doubt. But one of the reasons I go to the Keys is even in Marathon, there's this little place. I'm the only person who speaks English there, a Cuban restaurant. It is unbelievable, called La Nina. It's amazing. We go there every time we're there. Yeah. Anyway, so there's markets and there's trading stuff. You guys want to hit that or no?
Yeah, we probably should, I guess.
Well, I never thought the day would come that Jim Iuorio and Bob Iaccino said that I'm the special guest and that I'm the guy that you met along the line of high quality people, because I've been watching you guys for years, on the big screen. And that's one of the coolest positions I've been in my career so far, is guys like you, my friend Kenny Pocari, guys I looked up to when I was 13, 14 years old watching these shows. I appreciate you guys having me on.
Most people do think I'm Jordan and he's LeBron. So, there's always that argument about who's better.
Yeah, they're wrong, right? He's the Robin to my Batman, which is nice. Yeah. But anyway, so you heard what we were talking about. A couple different theses about you. You've seen the rocket ship this market has had off the lows. It seems normal to look at that pattern and say, wow, this has gone far so fast. Is it due for a pullback? What do you think are the drivers of it right now?
Yeah, so there's a couple perspectives I think you have to keep in mind here. And one of them being that the short interest in the IGV software index was the highest it's been since 2017. So a lot of institutions are caught off sides right now. And what we've seen the past 4 or 5 years is, especially with technology and how quick the markets flow, retail traders and retail money have a lot more power than they used to have just 10, 15, 20 years ago. So when things get cut off side pretty quickly, I think you see a lot of short covering. I think that's what you're seeing right now in the software index. I think up probably 10% already off the bottom in like 3 days. I think that's going to carry some more of the tech going forward. But look, back in February or March, right before the war started, we were projecting 2% or 2 interest rate cuts before the war. Now that went to 1 interest rate hike, and now I think we're kind of flat in the year with no cuts. So the scare was oil, the scare was stagflation, like you guys mentioned. But what nobody's keep in mind is that earnings are still basically almost at record highs in regards to growth. Profit margins are at record highs. AI productivity is still flowing through the system. We're still in the early innings of AI implementation. So there is a world that exists over the next few years that historically would be maybe yellow flags, red flags of economic slowdown, whether that's unemployment rising, whether that's inflation ticking up, whether that's other kind of things, oil skyrocketing, slowing down the economy. But what's not being factored in is that companies are making more money hand over the fist than they ever have. AI is only going to funnel money to the top. Productivity gains and profit margins going up is only going to make stocks go up. So there's a world where the middle class continues to get slammed, Main Street continues to get slammed, but the rich continue to get richer. That's what we're going through. And we've been going through it now for 6 years. Really, in my eyes, we can talk deep about this. The past 100 years, we've been going through it, but it's really been expedited the past 6 years, the biggest wealth divide in history. And that's one of the incentives for me to start Lloyd Financial Group. I mean, I don't come from generational wealth. So if I can help people make more money during this wealth transition, I get to take a 1% off the top as well. So I get to partake a little bit.
Luke, you mentioned retail trading, and I want to know when that sort of came into the forefront in your mind as to saying, wow, these guys actually move the markets. Was it during GameStop and all of that? Was it the fact that the 2001 attacks on the World Trade Centers was a buying opportunity? The attacks in the London and Spanish train systems was a buying opportunity. The great financial crisis was a buying opportunity. COVID was a buying opportunity. Which brought it to the forefront where you said, wow, retail is pretty powerful now?
Well, I think the GameStop era kind of made it front and center. I think it's been gaining traction for decades upon decades with computers. And I mean, back in the early 2000s, E-Trade accounts coming about. I remember seeing the baby advertisements during like 2008 Super Bowls and stuff. I mean, it's been going on for decades, but it just became more prominent, with the, making of Robinhood, back in, I think, 2014, 2015. I was one of the first downloaders of Robinhood because I was day trading in college, and all my professors hated me because I did that. I didn't pay much attention in college. I was too busy day trading on Robinhood, but it became more prominent in the past 6 years, and people have that dopamine rush. I mean, that's why, for example, we've been buying Blue Owl down in the nines. Thankfully it was up 10% today, a good day, but private credit space got hit so hard because everyone's got these dopamine rushes in these long duration vehicles. I mean, private credit's meant for 10 plus year holds, right? And then everyone gets scared because they lock up capital because they're preventing people from running to go get their capital that's meant for long duration. So that's not necessarily a bad thing. That's not signaling 2008, 2009. That just signals that, investors are more short-term thinkers and short-term minded than they ever have been, but that means they're allocating capital quickly and more than they ever have been. So, this, we can go back in history. I mean, you guys talk about this a lot. We're all on the same page here. 1913, 1914, the Federal Reserve getting created a lot of disparities of wealth and really funneled a lot of money at the top. 1930s, when we try to get off the gold standard, kind of the first time where the government tried to buy back all the gold for World War II to borrow against it. In 1971, getting off all the gold standard, all this liquidity. Not only has retail traders learned to buy the dip, but the governments learned to buy the dip because now they have infinite amount of funds to bail things out. So the government, throughout all these cycles, World War II, Great Depression, 2008, 2009, COVID era, they've learned the playbooks. All you need to do is print money, lower interest rates, and flood the economy with liquidity. So what I'm saying here is every drawdown seems to get quicker and quicker. Last year's tariff tiff, this time 10% drawdown made back in a week. All these drawdowns are getting bought very, very quickly.
Bob?
Yeah. So overall, then you're a wealth manager now. What do you separate in terms of age groups of your clients? You say, okay, you need to buy this dip. You need to buy a little of this dip. You need to kind of watch and hang on and wait till we get back above the old highs in order to buy this dip. How do you separate it? And do you separate it by age?
No, the answer to that is no, because I think maybe I'm an outlier here. Maybe I'm a little crazy. I think it's unfiduciary for you to put clients in different types of stock portfolios. Maybe risk tolerance is a little different. Obviously, if you're retired, you're probably allocated a little bit more to maybe some bonds or whatever it be, but the actual stock holdings, or if you think the environment's still very bullish for stocks, you should be aggressive for all clients in most instances because it's unfiduciary for you not to. When I started Lloyd Financial Group, there's a lot of people out there that want to run 5 or 6 different model stock portfolios. One's a dividend portfolio, one's a growth portfolio, one's a small cap portfolio. Why wouldn't you just want to have the top maybe 30 or 40 stocks that you think is the best for that environment in all across all portfolios? Maybe sometimes it's small caps. Maybe sometimes it's dividend payers, value stocks. I think it's unfiduciary not to, or to have many different strategies when you should pick the best strategy for that environment at that time. So right now, to answer your question, we're the most aggressive we've ever been in our portfolios. And frankly, it's worked out well the past 2 weeks or so with the rally back in stocks. We were buying into the March and April dip. We went from probably a 25% higher beta weighting in our portfolio, 75% lower beta weighting, to more of a 60-40 weighting, 60% lower beta, 40% higher beta. So we basically allocated 15% of our portfolio more to higher growth, higher duration, higher beta stocks. And that's been working well the past few weeks. We might adjust if the data changes, but so far the data is not suggesting to change. I think the short cover rally is going to continue to happen.
So you mentioned data. So are you talking about economic data from the individual companies, or technical analysis, or all three? What's your model based on?
All three. And we track 3 things every single morning, just to kind of simplify it, because there's a lot of noise out there. I mean, frankly, the past month you could consider a lot of noise, and look where we are, back to all-time highs, mainly in the stock market. The 3 metrics we track is inflation, growth, and liquidity. Those 3 things, I think, simplify the whole entire environment to kind of get the type of risk in your portfolio. And of course, inflation remains a risk with oil up, but until the data reflects that, until patterns start to happen, we can't really adjust, because until we see, if we see inflation tick up to 4 or 5%, we'll adjust. But that's a little bit of a lagging indicator compared to the other two. Growth still seems to be really strong. I mean, growth estimates, GDP, have come down a little bit, but earnings growth and profit growth still remains very high. So until the data changes, or until other kind of things happen, we'll remain bullish on that end. And then liquidity, we track like credit spreads, and we track government printing. We track other things in the markets in regards to VIX, other things that kind of are telling of how much liquidity and risk are people willing to take. So all three right now are pretty green. We had some yellow flashing lights at some point in regards to liquidity back in March and early April. We're paying close attention to that. But the past few weeks, we've seen a lot of credit spreads come back down. We saw yields go back down, and we saw even junk get a bid on the bond portion. So, I think that all three metrics remain pretty strong to remain pretty aggressive. And again, we'll adjust.
By the way, I love keeping credit spreads up on my board because I think that's a great early tell. Bobby, do you mind if I tell, you mentioned something before. Do you mind if I tell a quick non-market related story? Because as soon as you said it, it kind of shook me a little bit. I was having a hard time concentrating. You were talking about the Twin Towers. You were talking about the London bus bombings. Okay. So the London bus bombings were when? Was probably about 2002, right? Because
I think it was 2002 or 2003.
I remember there was a whole thing about, terror after 9/11. So this is a true story. And I'm on the trading floor and a phone rings. And it's one of my clients. And he's a crazy guy from London. And he says, I think the statute of limitations up, which by the way, we called the FBI right away. So the guy says to me, Jim, if I had prior knowledge of a terrorist attack, how would I profit from that? And I didn't even know what I said because it caught me off guard. The FBI later told me and my boss that I said, are you asking me how to hedge your portfolio in case there's another terrorist attack? And he goes, yes, right, exactly. So, and we went over some strategies and rates and things like that. And then about a week later, boom, the bus bombings happening. Which, by the way, I had tickets to go to London to see clients 2 days after that. We canceled after the bus bombings. So I immediately called my boss, like, what the hell are we supposed to do here? He immediately called the FBI. They came in, seized all the tapes, questioned us a little bit. And I've told this story, but never publicly before, because now it's 20 years. I'm sure I can't even remember the guy's name. Intentionally, I didn't want to remember the guy's name. And my friends are like, well, what happened to the guy? I don't know. I don't call the FBI to say, hey, what did that lead turn out to be? They're not going to call me. That's a pretty wild story, wouldn't you say?
Yeah, I haven't had one of those things happen. The wildest 9/11 story I had was I was on the phone with a guy that then disappeared and ended up dying. I mean, I was literally on the phone with a guy and I just heard a fry and he was gone. And then years later, I found his name on the memorial. But no, nothing like that. Your story's more fun. Mine's more depressing.
Yeah, I remember I went because I was meeting my wife at the racetrack afterwards. My head was spinning. I was just like, am I at the center of some big terrorist thing right now? And I guess I don't know. It was really weird. But by the way, okay, back to the show. So I didn't mean to go in a little historical interlude of my life. You mentioned credit spreads. Do you monitor credit spreads on a daily basis? I know the answer to that is yes. But then my follow-up question would be, what charts do you have up that'll indicate the most early turn? Which, by the way, I think this is one of the most important things in trading, is identifying when credit is drying up.
That's a great question. And that would be a better question probably for my chief investment officer. My chief investment officer has been doing this for 30 years at Lloyd Financial Group. His name's Colin Simons. He's the one that's daily paying attention to all these charts. Like I said, when it comes to these credit,
who goes and flirts with older people and gets all their money. Okay, anyway, go on.
Well, no, look, it's a good yin and yang. I think a very high level. I think very much about behavior, very much about the economic side of things. I think very, very much about the philosophical side of things. I think very much about the history and the Ray Dalio kind of way of thinking. And that kind of leads into too, like, what I was kind of referring to. Everyone said when I started Lloyd Financial Group, Luke, play it safe. Just try to outperform, underperform 1% each year of the S&P. No one's going to complain too much if you do that. I'm like, why would I start a business when I'm doing just that? Like, anyone can do that. I'm just any advisor down the street doing that. So, my philosophy is you got to be different. You have to try to earn your fee. So it's good yin and yang. You have obviously me thinking the macro, the behavioral, maybe be a little bit insane to make sure I'm doing protecting and growing my clients' assets. But you also have the more CFA kind of side of things that's the detail of calling. And I think that's where we get yin and yang. But to answer your question, the credit spreads, I'm kind of pushing that off a little bit. Junk bonds, I track a lot. The spreads between a couple of the different duration. I can't remember off the top of my head, but I know that's what Colin tracks every single day.
Yeah. Bobby?
Yeah, I want to put something up here, and I want to ask you both a question. And actually, I'll go with you, Jimmy, first, because you and I were both trading when this happened. What I have up on the screen now is GDP growth, both nominal and real, and CPI inflation from 2011 through 2014. The reason I put this together is because this is the last time crude oil averaged $95 a barrel over that long of a period. It was actually 43 months. The exact average was $95.02 for this particular 4 years. But then subsequent to this, the stock market fell about 30%. What do you think has to happen for that not to happen? If you look at these numbers, they're not bad.
Yeah.
So I'm trying to figure out, I know one of the things that was different back then is we had a different regime with the Federal Reserve. As soon as we started to slow down, we all know what they did. They printed money and they ran out and they weakened the dollar and did all the things that made our gold investments so valuable now. Yep. So what do you guys think, Jimmy? I'll go start with you. It has to happen for this scenario to develop with $95 crude oil and for the stock market to be okay, or do you need crude oil lower?
Okay. First of all, let's look at the price of crude oil as $90 a barrel right now. It's a little higher than that. Okay. For 5 years, as we just absolutely crushed the dollar, every commodity that was even mildly dollar sensitive, gold, stock markets, went through the roof to reflect the weaker dollar. The agriculture products did not because it was a supply issue, and crude did not for some unknown reason. So the $90 crude that we are seeing today, if we looked at that in dollar terms from 2019, is about $68 crude, very, very low crude, meaning it didn't respond to the dollar weakness. Secondly, that's one part of it, is that crude is arguably low compared to the strength of your dollar. But that's not the point I'm trying to make. The point I'm trying to make is much bigger than that. And I think what we saw in the CPI when it printed 33 and what we saw in the PPI when it printed 4.0, and the market not only yawned, but then we started buying stock. I think they were telling us that they are convinced that this is a short-term transitory thing. I'm no longer looking at the crude curve to determine that, because I think there's a little bit of mixed signal there. Because one, if the panic's really big on the short side, it could push the curve into backwardation. It kind of almost a visual anomaly. But I don't think this is the same situation as that, because that was some systemic issues that could cause it to be elevated for a long time. I think crude's back below 70 in the fall.
I am on the same exact page as that. I think these tensions are some sort of small solution. Maybe it's not a great long-term solution when it comes to the political side of things, but something is going to get figured out in the next few months. I think you'll see crude definitely fall below 70. But the answer to your initial question of how do you prevent a 30% drawdown, I don't think we necessarily do. Even though I want to be very clear here, even though I'm bullish right now, and I'm bullish probably into year end for some extent, we are very prepared, and we are actually we think we're likely to get very defensive towards the end of this year. We do think at some time the next few years, you are going to have systematic unemployment rise. And look, my father gets mad at me. I had somebody at the Money Show kind of raise their hand and disagree with me. That's what's so great about this industry, is you have people that agree, that disagree, you have bulls and bears. My father's been in IT, AI, kind of side of things his whole life. So he said he thinks of the philosophy that, AI is going to do the same thing the internet did and other technologies did. It's going to create new jobs and replace some jobs, but it's going to create new jobs. I just don't really see a world where that kind of exists. I don't see a world where everyone becomes a software developer, or even if in that case, my two brother-in-laws that are software developers are using Claude every single day to basically code for them. And they're guiding the code. You have to know how to read it and kind of guide it. But AI is literally meant to replace every single person out there to some extent. Obviously, can't do construction, can't do blue-collar jobs. But if that's the case, you are over the next few years going to have systematic unemployment. Then you're going to have a snowball that, the middle class Main Street guy has been for sure living on debt. credit cards, borrowing new money to pay off old money. This has been happening for years, but as long as you have a job, you can keep that going. But as you slowly see that start to tick up, which I think is going to happen the next few years, you're going to have a snowball avalanche of some debt coming due, some defaults coming, whether it's cars, maybe not mortgages directly, but personal loans, credits, credit cards, things like that. You're going to see defaults tick up. And in that environment, you're going to see the government try to bail things out. You're going to try to see the government, maybe, Republicans, Democrats both agree giving out free money right now is a good idea. I've never would have thought in my world, in my life, that Republicans would start talking about tariff checks, unemployment benefits, handing out money to buy votes. I mean, it seems like it's almost apolitical at this point that, social benefits are a good thing, even though the libertarian side of me is very frustrated with that, right? But look, that means that UBI probably will be coming into the equation at some point if unemployment does rise. UBI just means more free money handed out, and what they're going to do with that free money is spend it in the economy. So, but during that transition, you are going to see probably a 20-30% decline. I think that probably is closer rather than farther away. Maybe next year, maybe 2 years down the road, but we have to pay very close attention to that philosophy in my eyes.
A strange question to ask you. So Jim and I obviously know you personally. I've met your wife. I know you guys are planning to have a family at some point. It's my opinion that Jim's kids are probably the last generation of kids where college might have made sense. And based on what you just said, right, you're going to start a larger family than just you and your wife at some point. What are you going to say to your kids? Now, take out of the equation the legacy you plan to leave for them, because we talked about that as well, and just say, okay, you guys are going to have to make your own way. Luke Groman told us, Jimmy, was that 2 years ago, maybe? He said there's a time coming where plumbers make more than managing directors at Goldman Sachs.
Right. Yes.
What are your thoughts on that? I mean, you said UBI. At some point, the guys who are making the I in UBI may not want to give as much of it away. So
the reason I'm laughing over here is I was just in Florida. That's where we met, Bob, in person. And, I'm very glad you got to meet my wife. I married up. I'm a very lucky guy. And, it was basically a 2.5 week family trip. The first week we were spending time with my wife's family, her grandparents down there in Naples, went down to Miami, hopped on a cruise ship, my father who flew in. And during the cruise ship and after the fact, we visited my grandfather in the villages. But on the cruise ship and sometime probably in the villages, me and my father had some really good conversations. We got pretty deep and we started talking about the future, about our family, me and Anna, and what we're kind of expecting. During that conversation, we talked about college. It talked about my college and how, I'm like, I was very fortunate that, I've learned a lot in college by the people. The education was good, but I think I learned a lot more about culture and people. And I learned about, got my internship at CNBC, which is where I think I actually first saw you guys maybe on set at some point. But that whole college experience led me down that path. But then we started talking about my future kids. And I'm like, Dad, I don't think I'm going to push them to college, or I'm just going to train them and teach them how to use AI, because that's kind of the future. I think my father got a little mad at me for saying that. He said something like, you're just going to train them to use AI. That's not being a good father. I'm like, but I don't think he necessarily got the full point of what I was saying. There is a world where blue collar workers, it's all supply and demand. All of the job market is supply and demand, and how much value you can create for somebody. When AI that's all capitalism is. If you want to put more resources in your pocket, you have to solve bigger problems. You have to solve big problems and take big paychecks and take a portion of that and put that in your pocketbook. I mean, the more value you can create and quantify, that's how much you're worth. So when I have friends or people I talk to that say I should be making $150,000 a year, and they might be making 80 grand. Okay, well, quantify how much value you bring. If you're bringing $80,000 worth of value, that's what you should be paid. Frankly, you should be paid less because the company has to make a little bit of profit off of you. So in a world where AI replaces that productivity, replaces that value for a lot of the white collar, middle management areas, the only value that is left to be created is more the carpenters, electricians, and blue collar side of things. So all of the, when I grew up in a white, pushing me to such a white collar kind of area of go to college, get the degree, don't, make sure that you are, trying to be educated. That whole mindset is shifted. It's educating yourself in a different area. And I think that blue collar push is going to be there, but you do need those AI kind of side of things. You do need that. Do need to know how to train AI, use AI by your side in every kind of job you have. So even the construction jobs, even though you might be actually having to do things with your hand, you actually have to know how to use AI to maybe make yourself more productive even in that. Maybe solve other solutions outside of just the, digging up the dirt or, solving electric problems. So we're definitely heading down that world. One last thing, there was something on the top of my head there. There was a really important point to all of that. Maybe if you guys say something, I'll come back to me.
No, because Luis, can you put the banner up? This is the time of the show where I ask our audience for a favor. Thank you guys so much for the support. You've given us one more thing. Can you please scan that QR code and try Tradier Pro for free for 3 months? We talked to people who've been trading options for decades. Others have been trading options for days, and they both say the same thing about the Tradier Pro platform, and that it is the gold standard in options trading platform. And you can try it for free for 3 months. All I have to do is scan that code. Even if you don't have the intention of keeping it, please do it as a favor to us. We appreciate it. While Luke's thinking, I want to weigh in on what you asked Bobby too about kids in college. Because Luke, there's another point here, is that you want your kids to be intellects and to be deep thinkers. And college was something for that. Like if you send your kids to an elite college, particularly I had daughters, and I sent them, my one daughter has been in Illinois engineering school. She has degrees from Stanford. The other one, Illinois accounting school. And when you send your daughters to these great institutions, they meet a lot of really high-end people there too. And I'm not saying everything is about getting a husband. My one daughter has one, one's not. But you do want them to surround themselves with like-level people as far as their thinking goes. So if I have a son who's a plumber, I would absolutely be elated for that. But I'd want him to be the deepest thinking plumber out there. And that might be a lot of discussions at dinner and a lot of self-improvement. But I think we have to solve that problem before I'm just going to be the whole don't go to college guy. Luke?
Yeah, so it did come back to me. So let's talk about thinking, deep thinking. I think thinking is going to be a currency basically down the road. And what I mean by that is the creatives will come back. There might become a period over the next 10 years that ChatGPT and AI can create pictures, can create videos, can create movies basically by itself. But at some point after that, people are going to get content fatigue. We're already content fatigued. You have Netflix, you have HBO Max, you have Disney, you have all these different content providers for watching TV shows. No one knows what to watch anymore because you're just flooded with so much content. So that's essentially what's going to happen, in my opinion, with AI. You're going to be flooded with so much stuff. You don't know what to believe, what you can believe, what's real, what's not real. The creatives will come back eventually. So not only will the blue collar jobs be the place to be to actually make, 7-figure paychecks, maybe with inflation adjusted in 30, 40 years. But the also jobs to be are probably going to be the artists. It's going to be the free thinkers, people that are maybe the philosophers, or, even maybe some of the religious aspects. Like, so there's so many, the thinking is going to be a currency because everyone's going to be relying on AI to basically think for them. We're already there. Social media already thinks for people. The internet thinks for people. No one thinks for themselves anymore. So it's whatever way you want to take that. I think thinking in itself eventually is going to be a currency. Someone that can think differently, that has perspective, that has a kind of philosophical background. I think that is actually important as well.
I'll tell you what's interesting about this part of the conversation to me is that I think the thinking part is right. And I think the power of AI is actually what will get people who think like that to be able to create value for the economy, a type of value that is only present in the trades right now. As our buddy Widge just said down here, the way people around me hedge their expenses is by learning to do as many of the trades as they can. The return on investment of a hammer and socket set are immense. Now, the thing that drives me crazy about this is when I talk, I don't have kids, and it's at this point, I'm not having kids. So I talk to parents, and a lot of them seem to, and Jim, I'm not necessarily saying this to you, but you tell me if it sounds like I'm saying this to you. A lot of parents have this sort of, no, you need to go to college. I'm just not sure why. And that's not what Jim said. But, I've talked to friends of mine that have had kids. I talked to my sister about this, and she's like, no, they need to go to college. And I explained, like, you're not getting a return. When you add in the amount that college costs now for no reason, it's gone up like healthcare, education and healthcare. Those are the two things that are absolutely destroying families with kids. And the education gives you no return on investment. We're starting to see maybe the healthcare system isn't giving you a return on investment either. But I look at it from that perspective, and I say, I'm not sure. I think what I would say to my kids is, if you want to go to a trade school and learn a trade, plumber, barber, whatever it was going to be, I'll give you the amount of money that your first 2 years of college would have cost me. If you want to start a business, I'll fund that business with the amount of money the first 2 years of college taught me. If I go back to my college experience, I can't think of one thing other than social interaction that I've took to the real world. The way that I learned to sort of be social with people and communicate with people and, meet people and talk to them and get to know them, new faces, new friends. But outside of that, from a professional perspective, Jimmy, can you point out anything you learned in school that you use?
Yes.
What?
It's just the people that I've met along the way and how
Right, but that's not something someone taught you.
No, I know, but I think we're discounting that and that it's a
Well,
big deal.
It's actually where I was going. I'm sorry to interrupt you.
No,
I'm
it's quite all
usually
right.
not
I love it.
sorry, but I am right now. You're getting that on Roblox now. Now I know it's not the same, but we're fucking old.
Oh, I know. What's Roblox again?
Thank you. Luke, you want to explain to Jim what Roblox is?
I only know it because my little second, or I guess cousin's son. So would that be second cousin? I don't even know what that would make me. I've only learned from him because he's 14 years old and apparently he's been around it. So I don't even know what it is. Kind of reminds me, I guess, of like RuneScape back when I was young. I don't even know if you guys know what that is, but.
What do you mean back when you were young? that was yesterday.
I am not. Look at this.
There's gray in there. I see it. Yes.
Yeah. Okay, so there's another comment by Widge I want to put up because it's kind of what we're talking about. I don't know that we're helping anybody that's watching, but there's a lot of people watching now, and I think this is interesting. Widge says, Jim, if you had a legitimate conversation, I bet you Jim is going to say he has, Widge. Jim, if you had a legitimate conversation with the skilled blue-collar folks, especially mechanics and tool maker types, you'll have as good an intellectual conversation as you can ever want. I bet you Jim has. Go ahead.
By the way, Widge, as most of you guys know, the bar I own is every day at 5 o'clock, the tradesmen all come in and some of them have become my best friends. A handful of them are at my daughter's wedding. They're at my birthday parties. And you, Widge, you are 100% correct. My general contractor, who's a pain in the ass, Brad, who's never on time. He's one of the smartest guys I know. He can look at any problem and solve it. And some of the other guys, like the painter who owns a painting company. We talk about music and he goes so in depth to music. So to your point, yes, I believe that you can achieve a level of intellect that I think is good. I'm not even saying that I have that level of intellect. I'm saying that I'm striving to have that level of intellect. But I think you're always supposed to be, and that's a great point, Widge.
So just real quick. I'm sorry, Luke. Dougal said, I also don't know what Roblox is, but I've heard the word. Essentially, Roblox is an avatar world. It's a gaming and creators platform. Millions of people worldwide are on it, most of them younger than us, and they're communicating. They have conversations with their little avatars. They go to each other's land in the avatar. It actually is also a haven for child predators, but I think they're working on that right now, which is why, by the way, in our newsletter, Unfiltered Investor, we have never recommended Roblox, nor will we, because of some of the things that go on there. But I'm just using that as an example of how you've all seen kids that are friends that are 17, 18, 19 years old, and they're sitting there like this. Then every once in a while, one of them shows the phone to the other one, and then they go back to their phone. They just don't communicate like we used to. And I'll include Luke in this because I know personally, you don't develop his communication skills by being on your phone all day.
Well, then it started with my generation. I mean, we were on Xbox Live in 2010, 2009, 2011. If you made out the, you had to make sure your parents didn't hear what went on in Xbox Live chats because, there are a lot of crazy things going on in those chats. But that was happening back 20-ish years ago when I was growing up. And my generation was the first that kind of saw it where everyone was in their phones. They had I had a smartphone, I think, in 6th or 7th grade. I'm 29 years old. So you see a lot of that impact in today's world where people don't have necessarily the communication skills. They don't have the sales skills. And I will say in the world of AI, I don't think AI can do sales. I think that when you're selling something, you have to sell to somebody, whether that's the business owner or something. AI is not going to be a business owner. You have business owners using AI, right? So the sales roles will continue to be there, and that's where that world of communication. I think that's what matters. You got if you're raising a child or if you're talking to a young person, that I kind of when I'm talking to college kids that I mentor at this point, I'm always saying learn how to sell, learn how to be a real person, be relatable. Don't always talk. When I started in this industry, I try to be all talking Fibonacci and talking moving averages and get the nerdy technical side always came out in me, and everyone's like, what the hell are you talking about? It's going over their head. No one likes a smart person. They want someone that's relatable. So I think that's the world we're heading into, is you have to be able to communicate. Sadly, people aren't.
Yeah, relationship developing. That's what you're saying. But AI can't be the relationship. It can't be trustworthy. The relationship has to involve an element of trust. And I think trust is going to be a massive currency going forward. Let's wrap this back to markets. Okay. So you mentioned that you think a problem is coming in the labor market. And I think you're right in the next 2 years, but I don't think you're right in the next 5 years. I think that hopefully the market swallows up this technology and other industries are created. When we had, I can't remember, Bob Stein we had on here, and Bob Stein was saying like, yeah, but you don't know where it's going to go. Like everybody, if the richest 10% use AI and they're massively rich, then cottage industries will develop around servicing those people. Like even every party they have will have a band. You'll have a company that rents out bands to different companies. Nobody will clean their own house of the top 15% either. You'll have a company. I'm not talking about being a maid. I'm talking about big companies that provide these services on a mass scale. And those industries might, pick up the slack. Those two things popped in the side of my head. But anyway, you're talking about a have and have nots. You're talking about a UBI. Are you talking about a government that spends like drunken sailors and that you have to be involved in investments to make up for that? And what I'm angling back toward is, what about like hard assets like gold, silver, copper? Do you have spots for those in your portfolio?
All of the above, I'd say, except for real estate. And the reason I say that is population collapse. Again, supply and demand is all the market is all any industry is at the end of the day. And we are going to go through population collapse. Bob was kind of alluding to me. I got married at 27 2 years ago. We're trying to have kids. Hopefully we have multiple kids over the next 5 years. But many of my friends, I think I'm the first actually to get married out of all my friends. And you got to remember, I'm almost approaching 30 here. So, a lot of young people aren't getting married. They're not having kids. If we're not populating the world, or the United States at least, and where immigration's kind of been cut off at least the past few years, whether that's good or bad. I mean, legal and illegal, both immigration seems to be down. So population collapse probably going to happen in the next 25-ish years. That's projected by 2050. I would not own real estate over the long term. I think at every conference I go to, I hear builders building everywhere across the United States. So that's just a pure supply and demand metric. But everything else, price in dollars essentially should benefit. I'm a believer that the US dollar, if we're talking really long periods of time, and I know we're short-term traders here, a lot of us, so I'll bring this back to a quick short-term thing, but over the long term, next 30 years, I think the dollar will continue to get devalued. I think the government will continue to spend like drunken sailors. They have to. That's the only way to keep the Ponzi going. If they cut back, if we ever balance the budget, there'd be a huge recession, maybe even a depression, because it keeps the Ponzi going. And I don't think people are willing to give out all the sugar they've been addicted to, and everyone's getting fat and happy, right? So I don't think it can happen. So spend a lot of money, dollar loses value, everything price in dollars go up, cryptocurrency, gold, asset prices. You do have some inflationary pressure along the way. All inflation does is funnel more money to the top. Inflation is just bad for Main Street. It's not bad for the businesses being priced in dollars. They make more revenue when inflation exists, right? Because their revenues go up. So all of the above, except real estate. Now, short term, software is where we've been buying the crap out of. I mean, we bought Intuit, Celebrite, we bought blew out, like I said, private credit. It's not necessarily software, but we've been buying down these beaten down areas. We've been buying Prudential Financial. That's kind of around that space. Other software names we've been adding, like it's kind of in China, XPEV. It's kind of a Chinese company over there. But like with all these different names we've been adding, or you can actually add, the what was it? XL. I'm sorry, lost my train of thought. Software index, IGV. You can also just add that own that. We added Microsoft 1% on top of that. So I think in the short term, there's been negative rhetoric around the software space that AI is going to replace software. It's just going to make software more money. So,
a couple of comments I want to put up. Dougal says he's a sound engineer. Was an engineer? Yeah, I'm a sound guy for a living. Talking about ways that I'm sure there's a lot of AI going on in the sound arena. Then there's a question here, and I'm not sure what the question is. It's from Super. Okay, it's going to take me a second to say his name. Luis, put this one up. Supramaxillopanic, I guess is what that is. VIX rolled to June, July. What are the terms of trade structures agreed upon this quarter?
I've never traded the term structure of the VIX.
I know that never have either.
When I've been interested in the VIX, it's not about, because I don't understand it. There's obviously no storage costs, things like that. So I don't trade the term structure of the VIX. So I can't answer that question. Sorry about that.
Yeah, I can't either. There's another comment from Widge real quick I want to put up before I ask Luke another question. Widge says, Luke is describing a mild version of a crack up boom.
I wish we had him on so he could tell us what that means.
It's a final chaotic phase of a credit-driven inflationary crisis where trust in currency collapses. Yes,
you did that so quickly. Wow, that was awesome.
That is exactly what I'm describing. Ray Dalio talks about it in a great book called Principles of a Changing World Order. I'm not saying Ray Dalio has everything right, but I do believe in cycles. I do believe in history, and history repeats itself just in different variations. And after 250 years of a nation, these are things you tend to deal with.
I love that.
Yeah. All right. So when you structure a portfolio for a client, under the impression now that they're basically all the same, depending on risk tolerance, right? I spoke to Steph Guild in a webinar that I did with Robinhood. She's the chief market strategist at Robinhood. We talked to Brian Westbury last week, and it surprised me that they both basically said the exact same words. By the way, Widge says that was impressive, how you knew the crack up boom right away. Both of these two highly intelligent, highly respected analysts said the same thing. They said commodities are everything right now. So when you set up a portfolio for a client, do you look at commodities? You're obviously active. Do you get active in things other than the stocks that represent these commodities? I'm not talking about futures in general. I'm just talking about as a general sense. Do you get involved in commodities, or you just watch them as cues?
Yeah, so we definitely get involved in commodities. We can't trade futures like you were alluding to, but we own those commodities either through stocks, whether it's the mining companies of the individual commodities, whether it's energy companies, like we own Canadian Rail for a while. That was kind of our big energy play, and we sold that when oil skyrocketed because we kind of took profits on the way up. Thankfully, I think that's been a pretty good decision. Let me just check what it's doing now. But yeah, we've been trading commodity-based stocks for a while. We think we sold in that 48, 49, in that 45. So we don't own that much oil right now. We own gold. We own GLD as the ETF as a just base position. I think it's probably 4 or 5% of our overall allocation and our base asset allocation strategy. We are thinking about getting into copper. Copper had a big run up. I think there's going to come a point in time when we start getting into copper stocks, whether it's the individual stocks themselves or maybe through an ETF exposure. Copper is very interesting with the build out of data centers. I think 20 or 30 tons of copper is being used in data centers every time it's being built, and we know that is the future. The only difference is with copper, you can't put 20 tons of copper in your basement. I have clients that have gold bars and silver bars all throughout their basements. You can't do that with copper. So you don't have necessarily the physical side of it, which turns off a lot of clients. But yes, we do get commodity exposure. Mainly, I'd say oil and gold and silver and copper. Outside of that, obviously, there's other commodities, but it's hard to get farm exposure, cattle exposure, pigs, all those different kind of other commodities considered out there through individual stocks. But those are things we do take a look at.
Bobby, do you mind? I have this dinner, my retirement dinner. Can I blow out and you play us out?
Yeah, no, go ahead. Go ahead.
Luke, thanks so much. See you guys. And you guys who are listening, there's still more show to go. See you guys.
So Jimmy has finished his career on the trading floor, finally, 10 years after me, and we started right around the same time. He was down there 39 years, I think. I was down there about 29 years, on and off. So Jimmy's going off to his retirement dinner. But one of the things you just mentioned to me, if you had a client come to you and say, look, I really am afraid of the future. I want gold in my basement. Do you tell them that's a good idea, a bad idea, or just say, look, whatever makes you comfortable?
Well, a lot of my clients, like we were kind of talking about earlier, are blue collar in nature. A lot of them are religious. A lot of them are preppers in some ways, just kind of like,
Mm-hmm.
you know, making sure all their bases are covered. They're good risk managers themselves. Maybe they don't know much about the stock market and equity markets and portfolios, but in other parts of their life, they're very good risk managers. That's why they usually have a little bit of money. That's why usually they're the millionaire next door kind of client. That's majority of my clients is someone that's worked for 40 years and packed it away. They know how to save. They know they have family values. Usually they have a kid or two, or maybe they have some grandkids, right? So those kind of people, which are mainly who I work with, I'd say at the end of the day, I do like to have physical gold just in case. Maybe it's not a large allocation, but maybe it's out of their million, $2 million. Let's call it 5% of their portfolio. Maybe they do have, $100,000 or $50,000 of physical silver and gold just in case. Maybe they have some guns and ammunition too on top of that. So I think it's good to have your bases covered. I have some guys that even like to build wells to have their water covered if something were to go wrong with the water infrastructure. So yeah, I think physical is a good idea. I think there is a place for it. I think that we do live in this world where everything's digitized and commoditized online and through brokerage accounts. There's something about actual ownership of seeing your money, and I think that there is probably a small allocation to every person that should own some physical, because again, who knows what's going to happen. The reason why things tend to repeat themselves over history is you're born into a society that you think that's how it's always been. But what you don't realize is that's not how it's always been. Your grandparents' generation lived a completely different life. Your you're only a couple generations away from a completely different mindset, perspective in life. So, the people that say, oh, America can't lose number one status again. Oh, the US dollar will never lose world reserve currency. Oh, we'll never fight another world war. Like, these are all things that we think can't ever happen, but they might happen. And history says these things eventually will happen. So, I think it is good just to be prepared a little bit. I'm not doomsday prepper by any means, but what I am talking about is I do think some things are repeating themselves, and it's good just to have your bases covered.
How do you convince people? I'm going to use the phrase you used, although I don't think it's probably the majority of your clients. But how do you convince people who are quote unquote preppers and that are, it seems to me they may have a little bit of distrust in the government and authority. How do you convince them to even be in the stock market? I'm asking you this specific question because I have a specific friend. She's older. She's with the same wealth manager as me, and he cannot get her to get into the markets. Just can't get her to do it. She's saying, I've got X amount of money. I'm going to live X amount of years. He's like, well, we should have a little allocation here. No, I don't trust that. Well, I don't trust that. I don't trust that. At the end of the day, it's Win Trust Bank with a big checking account. That's all it is. Even though to me, that wouldn't be trustworthy because you look at some of the balance sheets, some of these regional banks. Anyway, the question I'm asking, what angle do you take for people like that to say to them, look, this is probably a good idea, at least right now?
Remember, it was only 250 years ago we fought a revolutionary war because of distrust in governments, right?
Yep.
So it's American to distrust the government. You're supposed to not trust the government. You're supposed to trust yourself and bootstrap yourself. So it's not a bad thing that you distrust the world. You have to understand, again, cycles. You have to understand. To answer your question, I would ask them a series of questions. I'd ask them a question of, okay, what happens if your worst case scenario comes true? So I'd ask you, Bob, what is the worst case scenario? What is the worst case scenario in your eyes? And if you had to talk for her, what would you think she'd say if she said, what's the worst case scenario?
Complete collapse of the banking system.
Okay. And then I'd ask, what happens then?
Well, I have my gold.
You have your gold. Okay. Well, let's say the
That's
bank
me.
collapses. Right.
Yeah.
I'm saying, let's say the bank collapses. Well, what's going to happen? The whole banking system collapses. Well, then the dollar gets devalued. Everyone goes for a run for the bank in some sort of ways. But what happens then? Unless there's a complete revolution, you have the government completely trying to bail things out, printing as much money as possible to make people, happy and okay and feel like they're comfortable again. In that scenario, you have hyperinflation. What does hyperinflation mean? Okay, well then
And stocks go up.
companies are making more money because all these people that are making money,
Yeah.
is the money printed gets pumped in the stock market. So what I'm saying is the questions I would ask would eventually lead to the outcome that the worst case scenario is actually the best case scenario for the top 1%. It always is. The top 1% always benefit. What do the top 1% own? They own stuff. They own corporations. They own assets. They own gold. They own real estate. So no matter what, it's interesting to think this way, but the worst case is the best case when it comes to investments.
Yeah, it's interesting because I think a lot of people, I want to put up Dougal's comment real quick, Luis, because I know what he's saying here, but what I'm about to say is kind of explaining what he's asking here, what he's saying here. He says making more dollars isn't the same as making more money, in my opinion. Dougal, I don't even think you need it, in my opinion, on there. It's fact. It's not opinion. They are not the same thing. But people forget that with inflation comes asset inflation. Assets become much more valuable as dollars become more common. Now, granted, it's the weaker dollar you're getting, but you're getting more of them. So that's one of the things I've told people time and time again is that if you fear inflation, the stock market's not where you don't want to be out of the stock market. And also gold, by the way, Luke, and I'm sure you know this, is only an inflation hedge when the Fed isn't fighting that inflation. If the Fed starts fighting that inflation, that inflation hedge stops working because the only counter to gold, if you're talking point counterpoint, is something that has a high yield. So the yields get higher and gold gets less valuable.
Gold, in my opinion, hasn't acted normally the past 2 years. I'll say
Agreed.
that. I always say gold. Bitcoin was the new gold for a while. Now gold's the new Bitcoin. I think that's a good way to put that for the past few years. I don't think it's going to stay like that, but right now, gold's a speculative asset class.
I actually had a lot of fun with the Bitcoin people because they know that I own a lot of gold. And I've spoken at a bunch of Bitcoin conferences over the last 6 months. And they always bring me in as the skeptic. And I'm a skeptic, but I'm not like a heretic, right? And so I'll tell them, I've talked about this on the show before, so people are going to start dropping off. But I say to them, how many of you own Bitcoin? All the hands go up. How many of you own only Bitcoin? Only a couple of hands go down. And then how many of you think Bitcoin can't go to zero and none of those hands go down? And that bothers me. That's
Now,
what
here's
always
what's going to
bothers
happen.
me.
When we're going through what I'm talking about through all this, I don't know if it's 10 years or 50 years or 100 years. Whenever what I'm talking about comes true, which it will, maybe it's 500 years, I don't know, but eventually it will. Bitcoin will infringe against the power of the US dollar, in my opinion. At that point in time, it becomes the most political it ever has been, and it could get completely banned from the US government, and that's when it can go to zero.
Yeah, I agree. And that's one of the problems. I still don't believe global governments will give up the money printing system. I don't think they'll give up the system of money. And that's what
That's their
Bitcoin
power.
purports to be. What's that?
It's their power.
Yeah. And, people who are like Bitcoin maximalists, they say, well, they have no choice if that's what we use. Well, eventually you have to pay taxes. Eventually you have to buy something from a place that doesn't accept it. You have to pay your gas bill, and a state government, a state municipality may not accept it. So it becomes a problem if you can't convert it into fiat. At least for now. That whole thing may change.
I agree with everything there. It just amazes me talking about taxes since today's tax day. It wasn't too long ago that we were paying no tax, or we fought a Revolutionary War for 1% T-tax. Now we give half our money to the government. Maybe there's some changes we need to make at the top to be able to get back to actual free markets and making sure that half of our paychecks just don't go straight to waste.
I'd love to see it. Luke Lloyd, where can everybody find you if they want to find you?
Website's the best way. It's LloydFG.com. That's 2 L's OYDFG.com. Or I think you see my Twitter somewhere. My Twitter, Lloyd Boy
Right
Luke.
there on the screen.
You can X, whatever you want to call it, Twitter X. But thank you, Bob, as always, for having me on. And it was great to meet you in person down in Naples just a few weeks ago.
Yeah, at some point you're gonna have to change that to Lloyd Dad, or if I don't know, I screwed that up.
No, my dad's always gonna be Mr. Lloyd.
There you go. Luis, can you put up the screen I just put up? For those of you that are still with us, don't forget we have Trader Fest coming up, PGA National, West Palm Beach, May 7th and 8th. You literally have, if I scroll down here, 20 speakers. If you look at the ticket price up here, $79. That's 20 speakers. Everybody here is active traders, either of stocks, futures, commodities, interest rates, options. There's a lot of big brain options people here. So if you're interested in that, a lot of these names you might recognize. The world famous Bob Iaccino is right here. There's Jimmy. There's Kenny Polcari. There's JJ Kinahan. There's Lex Lutheringhausen. Dan Passarelli. A lot of big names for $79 at beautiful PGA National, West Palm Beach. If you want to find this link, go to my Twitter, Bob_Iaccino, and it is the pinned tweet Just scroll down to the show more, and this Eventbrite link will be there. Guys, thank you for watching again. Tradier, thank you for having this show. This is Luke Lloyd, Bob Iaccino. Thanks, guys. We'll see you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.